Hello and welcome to the Weekend Investing Daily Bite of 7th of May. And finally, India has acted on giving the terrorists some lessons. Nine sites have been attacked by Indian Army, Indian Air Force, uh, and there is likely to be more in my view. So today we will go through the past terror attacks on India, how the markets have reacted, whether this is likely to have any major impact on our markets. The point to note here is that usually when conflicts don't get too elongated, markets recover very, very quickly or markets actually don't fall. But whenever we have very long conflicts running into years, that is where the conflict starts to drain the economy on both sides. So we will get to these different events that have happened in the last many decades toward the second half of the video. Let's see what happened in the markets today first. Do read the disclaimer fully and do subscribe to the channel if you haven't so far. Nifty absolutely flat. It opened a bit lower at near 24,230, but then gradually recovered almost 200 points from there. You can see that this top that was getting support to the markets is still intact, and we have now a market which is consolidated in the last 9-10 sessions, perhaps is ready to move up, but let's see where it goes. Nifty Junior recovered 0.5% today. As I was mentioning, some support has come through from uh, the 40 DMA. The mid caps up very nicely at 1.5%, almost recovering yesterday's fall, and small caps also going up by 1.19%, a decent climb back after yesterday's dropping. Banks up 0.6%, not so bad, I would say, given that a lot of anticipation was there about this Indian action, and now the first move has been made by India. I think market is a bit relieved that some uncertainty at least is out. We are going to act and act firmly, and the world is standing alongside India on this. And I don't think ever in any conflict the entire global nations are standing with India on this particular conflict. So there is, in fact, the UK FTA, which just got signed yesterday. So a lot of things are happening on the side while this was getting planned, and the US trade treaty is likely to be released in the next few days. In fact, President Trump has tweeted today that there is an earth shattering news that he wants to share with the world in a couple of days, and I believe that is going to be the trade treaty with India. Gold is down a bit today, 0.83%, but it has very sharply risen from nearly 92,000 to 97,000 odd. Gold is not seemingly weak at all. It is a very, very strong chart. You can see that in the last just 6 months, we've gone from 74, 75,000 to 98,000. That's a huge jump for gold, which normally moves only 11% in 1 year on average. So something certainly is happening in the gold world. There is, of course, talk about the Basel III norms coming into play from July 2025, where gold becomes a tier one asset. Basel III is basically a banking norm for international banks, where gold so far had a 50% haircut on it being a tier two asset. And now it will be classified as a tier one asset. I believe a lot of central banks are accumulating gold for this reason, that if they move from US treasuries to US to physical gold, in terms of their margins at the International Bank of International Settlement, their margins will not get impacted, and they would have diversified into gold as a tier one asset. So the tier one asset class, which was so far primarily US Treasuries, is now joined with gold. So gold is making a move into the monetary system officially, and this can really change a lot of things going forward, and we may see prices in the next 5 years that we cannot imagine today. That is certainly a possibility. The advanced decline trends were in favor of advances, 360 advances to 137 decline, so a uh, good gain here. And you can see here that She started slow, and then the advances went up. The declines were more in the first couple of hours, and then they went down. So a very nice sort of changeover after the first couple of hours uh, in the markets. In the Nifty heat map, we see Asian Paints, which was dramatically down 3.5% there, down there. Sun Pharma 2% down, Reliance 1%, HCL Tech 1%. But we had some nice gains in Bajaj Finance, Tata Motors, HDFC Bank, uh, Shriram Finance, and so on and so forth. In the Nifty Next 50 space, we had nice gains in Motherson, REC, PFC, Chola Finance, ICICI General Insurance, BPCL, Indian Hotels, and Hyundai. You had some losses in Swiggy, 4% down. Adani and Sol, Britannia, and a couple of other Adani stocks were down as well. In the sectoral trends, for the day, we see capital market segment going up like a rocket, 3.2%. So Bombay Stock Exchange, the BSE Limited, has come out with its results, and it has declared some fantastic set of numbers, fantastic set of dividends also, and hence capital market has taken a big boost. Even National Stock Exchange, which is unlisted, has come out with numbers, again very good set of numbers. So it does seem like that despite whatever is the narrative going around, the stock market and its allied uh, players are doing reasonably well. Autos made a nice move at 1.7%. You had media stocks, metal stocks, real estate, financial services, energy all doing nearly 1% up. And you had defense, FMCG, and pharma lose a bit for the day. For the capital market segment, the gainers are right here: BSE, Kefintech, Nuvama Wealth, Angel One, Nippon AMC, and the rest of the pack you can see on the screen right here. So let's come to the topic of discussion: will markets crack due to the attacks? So my gut feel is that markets will in fact get boosted, like the move we had today. The uncertainty is gone. The certainty that India is going to do well if there is more attacks is, in my mind, certain. If there is some major setback that happens, maybe a counter attack which has a lot of damage, only then I think the markets may crack for some time. Usually, while it doesn't sound right, but wars are good for the economy. There is destruction, and for the reconstruction, the economy gets churned. So, however bad that may sound, war uh, is a good thing for the markets, and that's what the U.S. market is entirely built around. It's built around the entire war based industries where they keep supplying defense equipment to the rest of the world, have a war every decade, and that's what keeps them going as well. So whichever way you look at it, war is ultimately good unless it becomes a war where you are so entrenched in the war that you have to draw money from your regular economy expenses, from your usual sort of public good money, and put it towards war, which happened in, let's say, the Vietnam War, where US continuously put money towards that war, and that caused the US economy to sink. And then they had to give up the gold backing to the US dollar, and so on and so forth. So a lot of things can happen if things get elongated, but if these are shorter skirmishes, a few weeks, few months, I don't think India gets damaged at all. So we are seeing on the screen all the attacks and the counter attacks and the blasts that we've had in the last 30 odd years. So you had Kargil war starting in 3rd May 99. Market went up. Parliamentary attack happened 2001. Market was in a very slow consolidation mode at that point of time. It didn't do anything for the next year or so, and then of course the rally started. Mumbai train blast happened here. Markets were impacted very short term but regained. 26/11 attack happened during the GFC crisis, so that really did not have a specific outcome as such. And you had Uri attack, Pathankot Airways attack, then you had the Uri surgical strike, Pulwama attack, Balakot at airstrike. But overall, you are seeing the markets don't get impacted, because unless and until it is going to damage the demand and the economy as such, nothing gets impacted. Markets are not, uh, you know, market doesn't work like a human brain with emotions. While we will feel sad if there is loss of life. Markets don't doesn't care about it. That's not its job to do. So what happened to the markets before and after all these attacks? So we have some data, and our team is extremely good at doing data mining and presenting numbers. So Kargil war, 12 months later we were up 36%. Uh, Indian Parliament attack, we were not moving at all in those months. 12 months later we were down 1%. Mumbai train blast, we were up 41% after that. 26/11 attacks, we were 82% above after that. Pathankot Air Base attack, we were up a year later. Uri Army Base attack, another 15% here. Surgical strike, another 12% there. Pulwama attack, another 13% in the next 1 year. Balakot air strike. So while it's difficult to ascribe these gains to these attacks as such, but what this data is showing you is that more often than not, there is no lasting impact of these attacks. It is a small short-term setback that happens, if at all, and the market then takes it in its stride going forward. So if we just sort of collate this data, then we see that on average of for these events, we were up 23% within 1 year of these events, 15% within 6 months, 6% within 3 months, and so on and so forth. So the numbers are not pointing to any kind of distress basis these attacks, at least whatever we've had in history so far. So as I was mentioning, markets react briefly, then they will rebound sharply. I met somebody just yesterday at a marriage function, and they were so worried. And the gentleman was saying that, should I sell my entire portfolio? And once all this is clear, then I will buy some. So that is the kind of narrative impact some people are going to have or are having or have taken action because of this. And certainly one should not be doing this. Uh, Military responses get priced in very, very quickly. So the first indication that a conflict is happening would have gotten discounted much before, not now, not when the action actually is taking place. So, this premium or discount of a market because it is prone to some conflict is already there in the system. When a foreign investor invests in India, they invest with the thought process that yes, India has a conflicted neighborhood, and this is possible. So that kind of risk premium is always built into the markets. Short-term volatility may happen, but doesn't alter long-term trajectories. So we saw mild dips in Pulwama and Balakot events, but Nifty was up within 1 to 3 months. Market stays resilient post Operation Sindoor today. So FI numbers not yet out while I shoot this, but I'm pretty sure we got some good FIs numbers today as well. So what should you do is exiting based on headlines or herd behavior leads to poor outcomes. Certainly don't do that. Be disciplined in your approach towards investing. Know the roadmap of your investing cycle or investing style, and how and when should you exit or enter. That should be clear to you, even in case you are not doing momentum investing. Even in a regular investing way, don't just jump out of the market. That is the worst thing to do. If you have a strategy, trust it. And if you don't have one, find one that is rule based, because that is the easiest in terms of emotionally going through these journeys, because you will not be able to predict when to buy and when to sell normally. Markets will evolve through sectoral shift. So, maybe if this goes on for a few months, maybe some sectors will do very well in this period. Maybe the defense sector will do very well. So good strategy will adapt automatically and keep you aligned with the strength of the markets. And basically there could be so many other ways of how to deal with this situation. Maybe if you really are very nervous about the situation, maybe you can buy some hedges, maybe you can buy some puts, maybe you can short some exposure in the index markets in case you are feeling that. But from my point of view, I don't think there's any need for that. What are your thoughts on how to deal with such situations, and how you have dealt with such situations in the past? Do share with us in the comments, and I'll see you in the next one. Thank you so much for watching. Do share and like these videos, and do subscribe to the channel. Thanks. Bye.